In this video, we're going to look at some practice examples from Chapter 13 so you can better do your work on your homework and followed by your homework, the comprehensive problem. So first, we're going to look at cash flows from operations using the indirect method. So we have a company that had net income of $470,000. We have their depreciation expense, an increase in accounts receivable, and an increase in accounts payable. So we want to compute the amount of cash provided or used by operating activities using the indirect method. Remember, with the indirect method, we start with net income. So we have $470,000 in net income. Then we're going to add our depreciation expense. We had depreciation expense of $67,000. The next thing that we're going to do is we're going to look at that increase in accounts receivable. That's when you need to go back to your reference slide, like I talked about, and decide, do you add an increase in accounts receivable, or do you decrease, or do you deduct that if you have an increase in accounts receivable? So we know that an increase in accounts receivable gets subtracted. So we have an increase in accounts receivable of $35,000. That's cash that we didn't receive from customers. We also have an increase in accounts payable. Current liabilities have the opposite effect of current assets. So if we subtract an increase for a current asset, we add it for an increase in a current liability. So then we're going to add $56,000. We have net cash from operating activities for this company of $558,000. In this example, we're going to look at the direct method. So we have sales, we have information about a notes receivable, we've sold common stock, we also paid out to purchase inventory and paid employees and purchased some equipment. So then it says that we only want to do the operating activities section of the statement of cash flows. Well, we know that the operating activities section only looks at current assets and current liabilities. So not all of this information is relevant. So what we need to look at is what we received from customers and what we paid out to suppliers and employees. It says that we had sales of $750,000. It doesn't give us any other information about the sales, that we received part of that in credit sales and part was cash. So we're going to assume that all of that was received in cash. So we have cash received from customers of $750,000. Then we have cash payments to suppliers and employees. We had cash paid out to purchase inventory for $345,000 and cash paid to employees of $230,000. That's our salaries and our payroll amounts that go out. So if we add those together, we get $575,000 paid out to suppliers and employees. Our net cash from operating activities is $175,000. Now we're going to look at the investing activities section. Now remember, the investing activities and the financing activities sections are the same regardless of whether we're using the direct method or indirect method or not. So here we have information about plant assets, We purchased some investments, we purchased plant assets, we also sold some plant assets and had a gain. We purchased treasury stock and we had a new issue of common stock. So we're looking at our investing activities section. Remember, the investing activities section is the long-term assets section. So that purchase of treasury stock and the issue of common stock, that would not go in the investing activities section. Those are both financing activities for the statement of cash flows. So what we need to look at is that we have cash paid out for those investments, we purchased new plant assets, and then we sold plant assets. So cash paid for investments, $55,000. Cash paid for plant assets, $147,000. And cash received from sale of plant assets. So we received $66,000. We don't need to worry about that $6,000 gain. That goes in the operating section. So the only three things that we need in here are the three things that involved our long-term assets. Our net cash from investing activities, we received it, it's a positive, we paid it out, it's a negative. So we have net cash of negative $136,000. The last thing that we're going to look at is a financing activities section. So financing activities is how we finance our company. We can either do equity financing or debt financing. Equity financing is through the sale of stock, and debt financing is through the sale of bonds. We can also take out notes payable and pay back the notes payable. So the things that show up in our financing activities section are paying loans, receiving cash from taking out loans, receiving cash from selling stock, paying out cash and dividends, paying out cash to purchase treasury stock. So if you remember from chapter 12, treasury stock is when we buy our stock back from the market. So we start with cash received from sale of stock. So we had $560,000 in common stock and $56,000 in preferred stock, giving us a total sale from stock of $616,000. We have cash paid to purchase treasury stock. We paid out $47,000 for treasury stock. And cash paid for dividends. We paid out $24,000 in cash dividends, giving us net cash from financing activities of $545,000. Okay. That is the end of chapter 13's PowerPoint. I will do one more video, and that's to show you a full example of a statement of cash flows for a company using both the direct method and the indirect method.